Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over some data. And so this is pre-market prep for Monday, February 10th, recording this before I head off to work. And so yeah, I just wanted to go over, the volatility index, the SPY, and Bitcoin, as well as a few other things. So let's jump into it here. So looking at looking at the UVIX here, did close on Friday at $29.81, being up about 6.5% on the day. But now in the pre-market, it does look like it's down about 3.5% or $1, currently trading around 28.77. And so looking here at the chart, it does look like we have kind of, graduated from this 2-week green box here that I have drawn. And it does not look like we got to retesting around $40, right around the blue line there. And so, I think that we could actually be heading lower. And some interesting stuff I will dive into with the S&P 500, but really just it seemed like we were kind of going to be in the position of repeating what happened last week with a gap up here in the UVIX or the VIX. But I don't think that's going to be happening. You start to see patterns repeating, and then you get tricked once they become obvious. They fool you, and so I think that's kind of what's happened here. And so what I am going to do is I'm just going to redraw this green box now to go up to the high that we saw in that period, which was from the high of last Monday, which was February 3rd, the high being at a price of $29. That was from Friday, I guess. The high from last Monday was $35.78. So got that marked there. And so, yeah, that's kind of, the green box. And now let's consider where this could be going over the course of really like the next week or two. And so I'm just going to draw a red box here. It's white right now. And I'm going to draw that coming down to $25. Really just being kind of arbitrary. And actually, I will adjust this to be, let's see, for the 5 days for this trading week, 1, 2, 3, 4, 5. I think I had it correct before. All right, so right there, and I'm just going to have that going down to a low of 25, and that was 35.78, I believe. Yes. Okay, and I'm just going to make this a more transparent line and make that red and lock that in place. So yeah, that's kind of where I could see this going over this week, maybe coming down to 25. And so what I have done personally with UVIX, I just sold my last UVIX share before starting to record this because, I think that this is going down to 25. But if in case I'm wrong, I had a buy order at 25. I actually moved that up to 27. And so, if I'm wrong, if it doesn't go down to 25, I'll at least have, one share or so at 27. But if I am right, then I'll have multiple shares down, maybe at an average of 26 or so. So that is not too bad. But yeah, I do think that this is going to be heading lower. And if I do flip over to the 10-minute time frame, we can kind of look at, the trading that happened on Friday. We can see that it nearly tested this blue line, which was a gap that had previously been filled at 27.42, hit the low, looks like during market hours, first 10 minutes of trading at 27.44, and then went up to nearly $30 a share, hitting a high just before market closed on Friday of 29.96, and then kind of held that, but then gapped down into the pre-market to actually find, this would be the 200 times 10 minutes, since this is a 10-minute time frame, the 200 moving average. that does look like it has found some support there. But yeah, I mean, like I said, think this could be heading below $27. So that is what I would be looking for. And just to switch back over to the daily time frame to see, yeah, that we are potentially, let's see, where are we at now? We're somewhere in between this green candle, right around 28. I've got 69 marked here, right around the middle there. I do think that we are heading lower. But then if we do look over at the VIX, we can see here that we have not yet filled the gap here that corresponds with the gap that was filled for the UVIX. But with the VIX, this is the volatility index, and this is, the reason why I look at the UVIX is because you can only really trade options with the VIX. I don't really like that. And so we did have this gap here at 1485, but it actually looks like the low from Friday was 1479. So that was in fact filled. Just going to make that line solid. But yeah, with this, we do have these other lows, like $12.70, the yellow line here. It's quite possible we could be pulling down to that over the next week or two, perhaps retesting this trend line that actually goes back pretty far in time. That was notable resistance going back to the highs of 2022. Lots of tests of that, some fake outs, but that was resistance until we launched above it here in August on, I believe, the 5th. Yeah, when the markets gapped down. And so, we might be pulling back to test that as support. So that is what I would be looking for. And if we do just flip over to the 10-minute time frame, this does not trade in the pre-market. As you can see, it is closed only during market hours. But let's see, on the 7th, so that was Friday, we did get a nice test of that gap that was previously not filled. Now it has been, as you can see there, and we have bounced. But it does look like, again, the 200 times 10-minute moving average does look like it is acting as resistance up here. So that might be keeping the cap on the VIX before we pull back. But maybe we do head up to test this uptrend. Perhaps we get some news, something volatility spikes up, and we do go up there, and that could be around 1850. But I feel like it's more likely to be pulling back. But anyways, yeah, so just looking at this here, that is where the light blue uptrend originates from, back to that low of 1270. But yeah, I think that this is probably going to 1270 over the next week or so. But anyways, let's flip over to the SPY. That is the S&P 500 ETF. This does trade the pre-market, so we will look at that in just a second. But yeah, I had kind of talked about this last week, how we might be repeating the same pattern that we saw last week, or the week before, I should say. We've just been, basically going up, red candle on Friday, gapping down, going up, red candle on Friday, gapping down, and, doing the same thing again. But this is where, I was talking about that we could be faking some people out. We start to see this pattern be repeated. Everybody gets on board for a gap down to retest this downtrending yellow line here, going back to the highs from December 6th. And, that was notable resistance over here before, Trump took office. This is the 16th, the 17th here, where we are above that yellow downtrend. Trump takes office during this week. And then we start to kind of get, volatility over the weekend. So I think this was DeepSeek, and then this one was the trade or tariff wars. Now we don't really have too much in the news. So I think that the SPY could be heading back up to its all-time highs of $610.78. So that is what I would be looking for, but we do need to be getting above this downtrend that I have drawn here, really just based on the open prices from these candles. It does look like Friday on the 7th, we did open above that level, kind of a fake out above it because we did close lower. But yeah, so I would look for a reclaim of that level. We do have this gap that was previously filled here at 602 right about. In the pre-market, we are above that at around 603.50. And then we do have the top of this parallel channel that I have drawn here. Let's see those 3 pivot points that you can see. And so the top of that channel would be getting to a price of right around 604, so a little bit above where we're currently trading. So I would look for some resistance around there. If we can get above it, getting above this downtrend would be getting to around 606 or maybe 607. So the opening price from Friday on the 7th was at, let's see, 606.89. So let's say 607. That's where we want to be seeing us getting above. And then we have this gap again that was previously filled at around 608. That's going to be another level. So what I would like to see with this is getting above. So let's see from the low here, or sorry, the close on Friday, what I would like to see is maybe something like this before getting up to new all-time highs. And then maybe we bounce and go higher, or maybe we come down. So that is what I would like to see there, but I'm actually just going to, I'll leave that up. It might get a little wonky though if I do switch over to the 10-minute time frame. We can see that the SPY did come down yesterday, or on Friday, I should say, did get rejected from 608, hitting a high of 608.13, and then it came down to this gap fill level around 602, hitting a low during market hours of $600.05. Holding the lows before gapping up, so kind of just the exact opposite of the UVIX, and we are now trading above that blue line at 602 at 603.59, up about 2.82% currently. But yeah, we'll have to see where this takes us. And yeah, I think that this is probably going to new all-time highs, maybe during this week, maybe not. And then if we do look over at the SPX, I think it gives a little bit better of a level for the all-time high. That is going to be at $6,128.18. You can see from that high that was hit on the 24th. That was a Friday, I believe. We do see a gap down over the weekend, bounce. Another red day on Friday the 31st, gap down, beautifully retesting this yellow downtrend as support, getting a wick down to a low of $5,923.93 on February 3rd, going up over the course of last week with this almost bearish engulfing candle. Did not open above the high from the 6th, or at least it doesn't look like that. And so, yeah, this does look like it's going to be bouncing from, the 21 and 50-day moving average right around $6,000 there. Also kind of a psychological level. So with this, I could see maybe it coming down to those levels, bounce up, and then getting to new all-time highs. So that is what I would be looking for with the S&P 500 or the SPX here. But if I do flip over to the 10-minute time frame, we can see that no pre-market trading on this one, but we did close Friday below $6,040.53. That was a gap over here that was previously filled. So I think that this could be coming down to around 6,000 before finding some support and then bouncing. So that is what I would be looking for with the S&P 500, a continuation to new highs, perhaps getting up to 6,200. Maybe this week, so we'll have to see about that. Then if I flip over to Bitcoin, this didn't really have too exciting of a weekend. I had thought I drew a horizontal ray based on the closing price for these candles on Friday, which is around 96,350. And yeah, we are currently trading above that. And so that does represent a CME gap. I don't know what that stands for exactly. I think Chicago something exchange. And yeah, so basically, because the market's been closed over the weekend, Bitcoin has been trading. So there's a gap up. And so that suggests that what we might see is a retrace to that level before going higher. And so that is something that we could be looking for, but this could also be breaking lower. We do have this uptrend based on the low from January 13th. It might not be the exact day because these candles get a little bit wonky. They're not on GMT. And then we also have the other pivot point being the low from February 2nd. That's how you get that red trend line. And we do have a confluence of levels here. This yellow downtrend based on the highs over here, the high from December 17th as well as January the 6th. That yellow line coming down. We also have this purple line that I kind of drawn here as an approximate, dip buying level around $92,600. Confluence of levels there. Maybe we retest that. So for me personally, what I am looking for, I do my daily dollar cost averages, $5 a day, nothing too exciting. But I do have this 786 drawn up here right around 93,500. And so I do have some limit buy orders placed for 94,000 and 93,000, $10 each, so nothing too crazy. And if we do dip down and fill those, I am actually looking to, when I add a little more to my account, plan on placing $10 limit buys for also 92,000 and 91, because on February 2nd we hit a low of 91,350, right around there. And so maybe we do retest that. Maybe we break below this downtrend, this red uptrend, and then retest this yellow downtrend over here to kind of break these higher lows. And so maybe that comes down to 91 or 90. And so, yeah, I just plan on placing the limit dip buys at those levels and just being consistent with my $5 a day dollar cost averages. And then if we do look over at the 10-minute time frame here, we can see that we are above that trend line. Maybe I want to readjust that so it does extend a little bit further. And that maybe something like this. And, that just being an approximate level, but it potentially does look like we have broken out from that. We have not seen any opens or closes above that level. Still haven't, so maybe this is a fake out. Like I was saying, we fill the CME gap here, and then maybe retest that as support. So flipping over to the 10-minute time frame, we are above that downtrend. So look for a retest of that coming down to around $96,500. All right, and then I also wanted to look at ticker symbol URA. This is the Global X Uranium ETF. Closed Friday at $29.10, being up about 2.6% on the day. Pre-market is up about 1%. And so with this, I've just been noticing this uptrending shaded region that we have seen, and we might be testing the top or bottom of that. But what I see happening with this is an ultimate breakdown coming down to between $25 or $24.50, as we do have a lot of levels down there. And if I do switch over to just adjust the axis to be automatic there, we do have this thicker white uptrend that I have drawn here that does, a lot of confluence there. So I feel like uranium could be topping out soon, and the dip buys would be really over here. So I'm trying to be patient with that. And once it does come down to there, I'll probably look at other uranium stocks, because I've heard that URA is not the best managed ETF, but maybe I misremember what I've heard about that. But yeah, what we can see here on the 10-minute time frame is it trading up here in the pre-market. But yeah, maybe we get a retest of 28.76 or maybe 28. So do keep your eyes peeled for that. I did also want to go over Tesla. I did go over this fairly extensively last night during Ticker Request Live, though, so not going to cover it too much here. But basically, what we see if I switch over to the 10-minute time frame is I've got this alert here at $360. I was thinking I'd add a little bit, basically a fractional share to my very small position. If it does come below $360 during the pre-market, is trading around $357.36, down about $4.30 or 1.2%. And yeah, we are below that level. I do have this line here drawn at $358.64. If I do switch over to the daily, we can see we did have this gap over here that has since been filled. And then we also kind of got this support line right around 358.64, like I had just mentioned. But something that I was thinking about, maybe we do get a bounce there, maybe it's short term, so good to add a little bit. But we do have this longer term uptrend going back to the lows of April when we hit a low below $140. And then also the other pivot point is going to be the low from August 5th when the markets gap down. That trend line was previously retested over here when we had a gap down, island gap here formed when we did pull back to that uptrend, then gapped above. So that was another excellent dip buying opportunity at around 212. And so if we do look at that uptrend, that would be suggesting price could be coming down to anywhere between around 270 up to 280. Maybe it only gets down to 300, but we do have a lot of levels going back in time that were previous resistance, could be support again, and then also do have this Fibonacci retracement here drawn with the 618 at around 272. So I think that we could be getting a bounce around 360. I think markets are going up. There is a lot of Elon hate right now, and so I do think that this could be fading. But if the market is bouncing, maybe we see a dead cat bounce before this does continue lower to around maybe 300 being the top. 269, have some fun with it being the bottom. So do keep that in mind. I did get a request to go over the VIX, or sorry, not the VIX, the DXY, the US dollar. So I did go over this a little bit last night during the pre-market, and so I could see this coming down to around 105, maybe 100 before bouncing. So we do have this downtrending level of resistance, and potentially a bounce coming down to there. So that would that's basically what I would expect. And so with the DXY coming down, I think markets will be going higher. So it is consistent with that. And then I do have up here the ILTB. This is a 10-year. I thought it was the yield, but I think this is actually the bonds. And so I actually do have to get running to work. So I'll have to look over the 10-year yields during tomorrow's pre-market prep. So I'll try to have that organized for you guys. Sorry I didn't get to it today, but hopefully that was helpful. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Take care, you guys. Have a great Monday start to the week. Cheers.